This is like a mid-cycle reset. By the end of 2028, a portion of the US listed digital asset treasury companies trading today will not exist, right, in the current form. They will either consolidate, get acquired, or exit the strategy entirely.
I'm very pleased to welcome to the show Norma Chu, founder and CEO of DDC Enterprise, listed on the NYSE American under the ticker DDC. Now, the ticker DDC stands for Day Cook. There's no Bitcoin in the name at all, but we're talking about why DDC has transitioned from not just a food company to also a Bitcoin treasury company. This is one of the more interesting transitions in the corporate world I've featured on my show. Norma is not just an entrepreneur, but also a Bitcoin investor. And today we're going to get her views on Bitcoin markets overall, and we'll follow her entrepreneurial journey. She's got a very interesting story. Welcome to the show, Norma. Good to see you.
Thanks, David. Thanks for having me on the show.
Like I said, DDC stands for Day Cook. You started off in banking. We'll talk about your background in more detail. Then you transitioned into social media. Then it ballooned into a large food distribution company based in Asia, listed on an American exchange. And now, over the course of the last year, you've been accumulating Bitcoin. Why? Why have you, DDC was doing just fine, distributing food and food products.
Yeah.
You've also got a social media and social media platform dedicated to food and cooking. It's grown to be very big. From the outside perspective, there was no practical reason for you to transition into a completely unrelated field. So why did you decide to start buying Bitcoins last year?
Well, I think everything starts with how do we create long-term shareholder value, right? And before I answer that question, maybe I'll give your audience a little bit more context about my career. It's been an incredible journey building DDC for the past 14 years. I started my career in finance, and most recently I was the head of equity research at HSBC Private Bank in Hong Kong. I think that's where I started learning about, the foundation of assessing different business model, understanding capital markets, and really paying attention to capital allocation. And I think a lot of that training is still applicable and very useful to my role now as the CEO of a publicly traded company. Every decision I make at DDC, including buying Bitcoin, is whether it's getting, run through the lens of an analyst with the same level of understanding of capital markets and always thinking about, again, how to create long-term shareholder value. So back in 2012, when I started filming cooking videos in my apartment, I had, no experience in running a consumer brand. But what I had was a conviction that Asian home cooking was culturally undervalued and it was commercially underserved, right? We're thinking about back, over a decade ago. And I think that conviction turned out to be right. And then, 12 years later, I listed the company on the American exchange. And at the time when I rang the bell at the NYSE, I described the culture that I built at DDC in 3 words: happiness, strength, and resilience. But I think as a Asian female founder who's taking the company public in the US, especially under this current environment, I do belong to a very small club. In the history of US capital markets, there's less than fewer women that's done that. I think that doesn't really happen without the mental toughness and also the willingness to build through, more challenging part of different cycles. It can be Bitcoin cycle, it could be cycle between US market relations, or, even gone through building the consumer business during COVID. I think it's also certainly doesn't happen without making calls or decisions that sometimes people look at as odd or strange or don't understand before they become more obvious. I would summarize, my career and all the way leading to why buy Bitcoin now is having strong conviction and kind of having that mental toughness to be resilient even during tougher parts of the market, because that allows me to build DDC into something that can compound over time. And so now the compounding now is where Bitcoin comes in, right? 21 hard cap in terms of supply, and it's the best bet against the currency debasement that all fiat currency holders face right now, especially running an operating business as harsh as a food business, because margins are thin, and we definitely fight really hard every day to generate as much profits as we can. And so, as the company and as a person in the driver's seat, think about ways to kind of defend our profits and how to see the money that we generate from the operating business can grow even further.
The statement that Bitcoin will hedge against fiat debasement is based on the underlying assumption that Bitcoin's value in nominal terms will continue to appreciate. Can you give us your thesis as to why Bitcoin will continue to grow in value?
I think once just to put it in layman terms, I like to do that when I put back on my analyst hat. I was bringing it down to probably two things, right? One is the supply, 21 million hard cap. You can replicate it with other digital currency or other cryptocurrency. And I think the second thing is part of the resilience of the asset, the performance of it since inception is really outperformed all major asset classes in the past, more than a decade. And from an entrepreneur perspective, I like assets that are resilient. We're saying that the long-term thesis of Bitcoin will go up. Doesn't mean that's going to go up every day without any kind of pullback. That's why when we live through the drawdown that we are living through right now, we don't panic or we don't make decisions that are more rash, but we actually see it as an opportunity to buy more, to keep staying on course with our thesis. And if you look at what we've done so far, entering this cycle in 2026, we've already doubled our Bitcoin holdings in the first quarter to 2,383 Bitcoin. And as part of that conviction and staying on course with our thesis, we've reduced our costs overall on our stack by 25%. So right now, our average cost on our holding per Bitcoin is only 80,000. And I think that's probably one of the lowest cost bases amongst all US listed peers.
What would prompt you to sell Bitcoin from your treasury?
Well, I think, part of the things that we think about internally is to not put ourselves in positions that we're forced to sell Bitcoin, right? So we don't take on, we're not over leveraged. We don't put ourselves in positions where there are margin calls that we have to cover by selling Bitcoin. And that's why during this cycle, we actually have the flexibility to continue to acquire when prices are low. But, in extreme circumstances, let's say, the operating business for whatever reason, I mean, nowadays, anything can happen overnight. For whatever reason, the operating business really comes down to a extreme cash crunch that without any cash infusion that it will go under. I think that might be an extreme scenario that we'll look into selling Bitcoin. But once again, if you look at our 2025 results, we're growing organically, right? We have improved our margins. We just reported our very first positive adjusted EBITDA as a company for the history of the company. We're sitting on fairly healthy, cash balances. I don't think that's going to happen anytime soon.
Before we continue with the video, let's talk about today's sponsor, Delete Me. Now, there's an entire industry built around collecting and selling your personal info. Data brokers collect information such as your name, address, and phone number, then package and sell it to third parties. Delete Me is designed to help reduce that exposure. It only takes a few minutes to set up, and they handle all the work in the background. They identify where your data appears, verify those listings, and submit removal requests to hundreds of broker sites. They also keep monitoring since these listings can come back over time. I've been using Delete Me for over 2 years now, and they have reviewed over 325 listings of my information. This saved me over 12 hours of searching and reviewing it myself. The reports show exactly what was found and what was removed, which makes the process transparent. Scan the QR code on the screen here or go to joindeleteme.com/DavidLin, link in the description down below, and use code DavidLin for 20% off. Now back to the video.
Yeah, well, speaking of cash balance, let me just pull it up. So this is on the DDC Enterprise website. You've broken your financial information actually very clearly, so I can clearly see that you've worked at a bank before. Most websites don't have this broken down so clearly and easy to find. Anyway, this is your current balance sheet. $3 million US of cash as of December 2025. What is your goal here? Is it to convert this cash into Bitcoin, or do you plan to have a mix? Basically, what is Bitcoin for you? Is it a cash equivalent, or is it a cash replacement, or is it a separate item altogether on the balance sheet?
Yeah, and I would probably look at two line items, the cash and cash equivalents and also the short-term investments. So I think those I would consider as deployable resources that we can use to continue to accumulate Bitcoin. And when we look at accumulation, is a combination of factors going in, right? Whether we use and deploy the cash on hand or use cash flow generated in the operating business to continue to stack Bitcoin, or we tap capital markets. And I think right now, there's so many innovation in the market right now, really thanks to Michael Saylor, really leading the digital credit market space. I think not only our company in the DDC positions as a treasury company, we can potentially raise more capital by issuing common shares. Of course, right now trading at below MNAV, it might be tougher to do, but there's also opportunity to kind of explore launching our own digital credit product that can also continue to fuel our, access to capital to continue to buy more Bitcoin. So when we think about it, bottom line, the differentiation is DDC has a growing and profitable operating business that if we choose to, we can continue to use that non-dilutive capital to buy Bitcoin.
Why don't we see more companies following the same strategy, which is to diversify their treasury assets from fiat cash, perhaps in different currencies if they want to hedge, into digital assets?
I think we are seeing it, but the adoption is definitely going to be a long process. And me having gone through the process, right, from, like you said, a traditional food operator or a traditional business operator to entering into a digital asset space, I think it requires two things. Number one is the conviction from the founder or the CEO, right?
Yeah.
Because I have to see this through. And if you are a professionally hired CEO, are you willing to go through the scrutiny and the learning curve, right? Build that conviction yourself. And then not only do you definitely need to have the conviction yourself, and then you present it to the board. Not just educate them, but encourage them to educate themselves on what's happening in the broader money, scenario, and what we should do as a company to defend ourselves. Once we get the board approval, then we have to go to the shareholders, both in the public space. So I think those two are probably not easy tasks to take on if you don't have a conviction in your role. And me being the founder, I've built DDC for 14 years. It's not like, hey, I'm going to give Bitcoin Treasury a try, and if it doesn't work, I'm going to find another gig. I definitely have thought through this for a long time and run through many scenarios before I brought it to the board. And I worked with the board for a number of years, so they also understand my style. Like I'm not going to randomly throw ideas that I think that's going to work. When I present something, I have thought it through. So I think those might be the two major hurdles for other companies to adopt it, in a relatively short period of time.
How are you acquiring Bitcoin? Is it with your cash balance or are you raising money?
We're doing both. I mean, last year we did a number of capital market raises. The market was great, and I think the timing was right, and we acted fast. So we've done a couple raises last year. So far this year, we've done a combination of either deploying cash or issuing more shares to buy Bitcoin. So it's a combination of the above.
If you're raising equity, let's say, to buy Bitcoin, how would you convince an investor who may be skeptical? Maybe somebody who says to you, Norma, why should I buy newly issued shares for you to buy Bitcoin when I, as an individual investor, can buy Bitcoin myself? I'd rather you, let's say for this particular case, I'd rather you raise money for CapEx on your core operations to expand your businesses in the food products and marketing divisions, which are your, main segments here thus far.
Yeah.
How would you respond to that?
Well, I think those two are probably not mutually exclusive. And you're absolutely right. I mean, there are going to be investors that don't want the Bitcoin exposure. Or if they do it on their own, right? And the purists, they do it during their own cold storage and off the chain. And that's very possible. And that's probably not the right type of investors that we are speaking to. But I think some other investors maybe, hey, they want that access to the Bitcoin exposure, but they also like the potential leverage when Bitcoin goes up, when the market returns. I think DATs, including strategy, Metaplan, and all of our sector tends to, I would say, outperform because of the leverage that we have. As a listed company, we can raise that much more capital to take advantage of these opportunity to stack Bitcoin much faster than an individual. That's one layer. The second layer is the access to products that can help us probably maximize the value of even holding Bitcoin, right? For example, if you are a Bitcoin investor, you hold Bitcoin on your own, of course, you can do some kind of yield generation. But I would bet that the product they're given to a company company like DDC will have much more tools in the toolbox when we open up that box of like, how do we generate more yield with the growing stack that we have on the balance sheet? So I think those two are probably the compounding factor that I think when an investor wants to look for more upside when the Bitcoin price come back, they will look at a company like DDC and add on to that, which is the operating business, right? We can also contribute it to more cash flow. But once again, I think when we talk about issuing shares to buy Bitcoin, one word always come up, which is MNAV, right? And I think it is something that internally for our management team, we are actively looking at how to better design a metrics and share that, I would say more developed metrics with the public market to help all investors look at not just DDC, but other DATs as well. So if you see all the market activities that we've been seeing the past few months, right? Different DATs are doing different things. A year ago, right, DATs are all cookie cutters. We come, we follow strategy playbook, we raise money, buy Bitcoin, raise money, buy Bitcoin. But now this year, we're already seeing a variety of different things that we also expected the whole sector to evolve and continue to grow going forward. Matter Planet, right? Simon announced during his earnings call that they started 2 different business units. One is for asset management, right? One is for early investment into Bitcoin ecosystem companies. So that's one way of like organically growing into and also extending the operational reach into the whole Bitcoin ecosystem. Right. And then we have Jack Mallers announcing a 3-way merger into 21 Cap, right? And so not only acquiring another, I think more like I would say asset management company or the Bitcoin lending business like Strike, but also adding an energy/Bitcoin mining play into the whole listed platform. So imagine how one metrics like MNAV can help an investor make a decision or quantify or evaluate all these management decisions that different DATs are making right now. Right. And I think the same thing is applying to DDC. I mean, we have a number of strategies that we haven't announced yet that we're working on that I think eventually is going to also make DDC stand out, both not just having an operating business and a Bitcoin treasury company, but we also extend some reach into the operational layer as well.
Where are we right now in the Bitcoin cycle? Let's talk about the Bitcoin cycle first, and then we'll go back to what the other digital asset treasury companies are doing. The Bitcoin price has fallen nearly 50%, more than 40% since its highs last October. Several digital asset treasury companies are already below their operating cost. Now, the cycle is very much reminiscent of what happened in the last bull cycle, which is 2021. Usually it peaks and retraces about 50 to 70%. If you look at where it's trading at right now, which is hovering between $69,000 to $80,000, it's been doing that for quite some time now in the last couple of weeks. It looks like the last cycle top. It looks to me like, just looking at the chart, Bitcoin has in the last 2 to 3 cycles bottomed out in the prior bull cycle top. That's my observation. Where do you see it?
I would combine my analyst hat and being in the CEO seat. I would say this is like a mid-cycle reset. I don't think it's a thesis breaking event, right? I mean, looking at the chart, like you mentioned, it does look like very much like 2018 and 2022. We've broken the 21-week and also the 12 months moving averages. We've seen sentiment roll over really hard, especially in the beginning of this year. We've also had a couple of deleveraging events that happened. We saw massive unwinding. I think all these patterns is familiar, right? But I think what's structurally different this time is the holder base. I mean, if we look at 2018, there was almost probably no or any meaningful institutional ownership of size. And then 2022, the institutional layer is probably more speculative. But now in 26, we have the, spot ETFs with very deep liquidity. We also have sovereign funds coming in to become Bitcoin buyers. And we have, a real group of listed companies, DDC included, that are accumulating, with conviction and not just flipping. So I think, the marginal sellers in this drawdown is very different from the previous two cycles. So if you ask me where we're in the cycle right now, I would say we're in the part where convictions is continue to be tested. We already saw some DAT selling the Bitcoin, in the past couple months. But I think this is the part of the cycle where we will see the difference between, a Bitcoin holding company, right, and versus an operating business that holds Bitcoin gets repriced over time. And I think for DDC, we have used this window to kind of double down, continue to add to our holdings, and we're about to continue to do more of that. So, my seat in my role, I'm not here to call it bottom. I don't know how. That's probably like a Marcus question. And I do want to build a business where, we don't have to. We don't have to, because we have a system where we can continue to stick to our thesis and ride out these tougher moments.
Okay. I've spoken to Marcus Steelan. He's one of your advisors, great analyst. And he's pointed out that in prior midterm years, so 2014, 2018, and 2022, Bitcoin has traditionally traded about slightly below its one-year moving average in the fourth quarter of the prior year before the midterm election. How much of this do you think is already priced in?
I love that you point this out. Marcus wrote this piece, I remember very clearly, I think early to mid-October of last year. And it was basically right around when we hit the all-time high. And I think it was such a critical piece for us. But I think it's his patterns. Marcus' pattern is probably one of the cleanest historical anchors that we have. It's so technically driven. And for someone that we have on our advisory team, I do take his work very seriously. It helped us make some very important judgment in the fourth quarter of last year, when a lot of people is like, hey, you just raised some new cash, you got to go all in, buy more Bitcoin before it hit 150, right? And then we were like, what if it goes down to 60? And but I think I would really treat Marcus's framework as one input within a more structured framework, right? And what's already priced in, I think in my view, a meaningful share of the seasonal weakness is being priced in. Once again, we've already have breaks below our one-year moving average. We have already seen the sentiment change quite dramatically in January, February timeframe. We've also already noticed, rounds of forced selling from leveraged participants, and also from, digital treasury companies that had to defend their balance sheets. So historically, I think that's the part of the cycle that does most of the damage. But I do want to separate, the pattern from the structure, right? So in each of those prior midterm years, 2014, 18, 2022, the drawdowns are usually followed by a rather powerful expansion, right? Driven by liquidity, by the halving cycle, and by, further expansion and adoption. So I think the pattern for us to notice is that Bitcoin is not that Bitcoin breaks and it stays broken. The pattern is Bitcoin breaks, the weaker hands clear, and then the next cycle starts from a stronger base, right? And I would go further into saying what I would expect in the next few years. I think by the end of 2028, which gives DAT space, right? Michael Saylor coined it. Last year was DAT 1.0 or Bitcoin Treasury 1.0. I think now we're in the 2.0 era where everyone's adopting their own different models now. Give it 2 more years, right? By the end of it, I think a portion of the US listed digital asset treasury companies trading today will not exist, right, in the current form. They will either consolidate, get acquired, or exit the strategy entirely. Right, the ones that survives and stays will be the ones that maximize their capital structure strength, and they will ideally probably couple that with a growing, profitable operating business underneath a growing stack of Bitcoin.
Okay, so I'll ask you to put on your analyst hat one more time, Norma, and answer the following question this way. So, you currently have over 2,000 Bitcoin on your balance sheet. If an analyst were to value your company using a discounted cash flow model, how many Bitcoins should we assume you will have in the next 1, 2, and 5 years? And what is the price of Bitcoin we should have in the model as a base case? Should we keep it a constant price just for the sake of the model, or should we actually add a growth rate? I mean, what would you do in this position?
What I would do now if I were an analyst, I would definitely talk to Claude more and have it
Okay. All right.
have it be my co-working buddy, you know what I'm saying? That's definitely the first thing I would do.
Okay.
But coming back, I would say
Let's break this down
last year we
into
had
two parts. Yeah.
yeah,
So
yeah. Let's break it down. The first one, I'll share with you my target,
Sure.
my internal target. So last year, we were very ambitious, right? Coming out of the gate, and we're like 10,000 Bitcoin by the end of 2025. We ended with a 12% completion rate, right? Sure, we did not complete as aggressively as we wanted because of market conditions, right? I mean, we could have bought a few hundred more in the fourth quarter last year, but then the cost basis would be like close to 115,000 Bitcoin per Bitcoin. And so I think the management team, like when we throw out these targets, now I've learned to be more cautious. But at the same time, I think analysts should also, and also investors should also have take it with a caveat, right? The caveat is like, does the management team, can they stay nimble while staying on course rather than just like blindly stack Bitcoin, So because I think it's also important to like stack it at better prices, think about broader market potential risks. So coming back with that backdrop in mind, we do want internally to hit the 5,000-6,000 Bitcoin range by the end of the year, and that's given what we know today. Right, given the recent drawdown, given the macro environment and the midterm election. So all the known factors factored in, that's kind of the internal target. And where does that put us on the map? Right now, we're ranked 31st globally. And when we hit that range, I think we could climb up to around 20th. Okay. And I think the next milestone in the next couple of years will be top 10. And, we can all pull up bitcointreasury.net to see what brings us to top 10, right? For that list, I think is 10,000 Bitcoin. Sorry, I covered myself, is 14,000. Right now, HUD 8 is ranked number 10, right? 13,696 Bitcoin. So that will be, I would say, the 2-year target. That's part one. Part two, in terms of building the model for the pricing assumption, I would be conservative because I am putting on the research analyst hat. I would probably do 2 models. Like one is like, let's call it 85,000. Just be super conservative and say, you know what, Bitcoin's going to trade flat for the foreseeable future, for the next 2-3 years. What does that look like for DDC over the next, holding MNAV stable, constant, and holding Bitcoin constant? If this company continues to stack, what would that share price look like, right? And that would be one way to look at it. The other way would be more aggressive. Okay, then let's build the matrix. It could be, okay, 120, let's hit the previous all-time high, right? And then the bull case, okay, let's break the previous all-time high and let's bring it to 180 or 200. I think that would be my 3, top of the head levers when I'm building the model.
Mm-hmm. Do you have a maximum amount of Bitcoin, I guess, relative to the total size of your balance sheet, such that, let's say, in the worst case scenario, if Bitcoin falls another 50%, let's say it happens, I'm not saying it will, but let's say it happens, the company valuation doesn't collapse just because of the Bitcoin price, because you've over leveraged yourself to Bitcoin. Do you have that safeguard here?
Yeah, I mean, we're not very leveraged. I mean, Bitcoin, I think, would have to drop to like, I think we ran it recently, 15,000 per coin or 18,000, like something very low. And I think once again, if we were to put it in a super conservative mode, then I would strip away the Bitcoin and say, let's look back in the operating business. Let's build a DCF model just on the food business, growing organically 10-15%, right? Margins slightly improve. What does that look like on a DCF basis? That would be the floor, I think, for DDC.
Yeah, you mentioned
Should I even be sharing that?
Well, that is important information for investors, so I appreciate your candor here. You mentioned the MNAV premium earlier, the MNAV, the evaluation premium that DATs use to get their net Bitcoin holdings. So that actually, for the sector, many companies are trading below 1 times MNAV, including your own, by the way, right now. So what does that tell you about the sector right now? What does it mean for the layman watching this show? What does it mean when MNAV is below 1?
Yeah. Well, for the super layman terms, that means the stock is trading at below the net asset value of the Bitcoin holdings, right? But let's take a step back in terms of like, why was there a premium or such high premium a year ago? I think it could be a number of things, right? We were in the super early innings of the birth of the AT sector. And, we were trading at large premiums because there are very few vehicles, right? I think we were probably one of the top first five, I think, listed in the US, and then subsequently, a lot of them pop up globally as well. And so we were also riding along on the narrative, the pricing momentum, and also a lot of enthusiasm from retail investors, which is great. But I think the resets that we've been seeing, especially since the fourth quarter of last year, I think it's a healthy reset. Right now, I do believe, and I think me being a research analyst for a number of years before, markets when they're high, they tend to overshoot. When they're down, they also tend to oversell. I do believe right now we are in the oversold space, right? I think a lot of the compression on MNAV has been overdone. So I too monitor this space closely. So what does that say about where the sector is going? Probably three things. I think the first is the sector is consolidating around quality, right? Below 1x MNAV environment is very brutal for DAT, especially for the ones that want to continue to raise more capital via share issuance. It makes it much harder to do that. But I think some DATs, even despite this environment, will have the ability to access different, I would say, vehicle or different tools to continue to fundraise and continue to especially buy more Bitcoin during, low Bitcoin prices. So I think we are going to see that consolidation come out. More DAT's going to announce more Bitcoin purchases via different type of issuance. Second thing, I think this is when the real work gets done, right? I think premium hides weaker structure, and then the discount right now forces more discipline, especially from the management team. It certainly is easy when you can raise a lot of capital and just buy on the spot. But now every day we have to think about how do we maximize shareholder value when the stock is trading at such a depressed level. What can we do? I mean, fortunately, we have an operating business that generates, healthy margins and cash flow. We can continue to add to the stack even without aggressive fundraise. So I think that's, where the sector is also going.
Well, do you
the
have
third one, which
Sorry, please continue.
the final one, I think more investors is going to eventually realize that MNAV is not the permanent verdict, if you will, to judge whether, is this DAT performing, or is it the right time to buy and build position? Once again, I think it's a good snapshot, right, to really simply put, okay, it's below its net asset value. But as we continue to kind of evolve the DAT model, the net asset value is not just going to be the Bitcoin stack, right? It could be a Bitcoin-based operating business. It could be a number of other things being added to under one listed vehicle. So I think over time, both management team is also up to us to work with either analysts on the street to build and offer better performance metrics for investors to assess the whole sector. Investors is also going to grow wanting a better metrics, I think, to evaluate the space. So those are my three things.
Okay. Do you have a long-term vision or goal for how many Bitcoin you would eventually like to acquire? For example, Michael Saylor said that he eventually wants to acquire maybe 5 to 7% of the Bitcoin supply. I think strategy is somewhere around 3, close to 3 now. And he said that at that level, Bitcoin could be driven up to about $1 million a coin. Do you have a target in mind, or do you just plan to acquire whenever the conditions are right for DDC?
I think my goal is kind of going back to my 2-3 years target sharing top 10. I think being globally top 10, the stack is sizable enough that it gives us a lot of flexibility and possibility to do many things. Yeah.
Okay. Have you considered gold as a treasury asset? Let me pull up a chart. This is gold is the blue line. That's the XPX is the S&P 500, and the green line in Bitcoin is the bar chart here. Now, over the last year, gold has outperformed many other assets, including the S&P 500 and Bitcoin. over the last 5 years, gold has actually outperformed both assets as well. This is a rare moment for the yellow metal because gold is in a bull market. And if you go back further in history, the reverse happens. Bitcoin has outperformed both. But over the past 2 to 3 years, given gold's outperformance, a lot of analysts, portfolio managers, even large institutional investors have looked at gold as perhaps an alternative to bonds. Morgan Stanley, as Mike Wilson has shifted his stance as well on gold. JP Morgan has a very bullish stance on gold. So Wall Street has basically shifted 180 on gold in the last 2 years. Do you have any thoughts on this asset? Would you ever consider complementing your Bitcoin treasury with gold or any other hard asset that's a dollar alternative?
No, we haven't. I mean,
Okay.
trust me, I have been pitched to consider looking at gold related investment for DDC in like a number of different formats. And no, we haven't. But I mean, that isn't to say that it's not a good investment for other investors, right? I mean, gold has thousands of years of like institutional muscle memory. So during this debasement trade, it has definitely outperformed Bitcoin because Bitcoin, by contrast, is still in the process of being like institutionalized, right? I mean, there's going to be still a huge adoption curve for Bitcoin, where largest pools of capital, right, the biggest funds out there are still having conversation about granting permission to allocate to Bitcoin. So I do see this allocation. I would call it like a disallocation an opportunity for companies like DDC, but it doesn't, throw out our thesis for the long term.
Okay. Would you convert a portion of your cash to a stable coin?
No, why, why would I do that? Why did you ask that question?
Well, I'm just thinking some people have said that stable coins offer a faster and more reliable way of transacting B2B or perhaps even multinationally. I wonder if
the cross-border payments.
Yeah, exactly. Remittances would be easier. I wonder if you believe that, first of all. And second, if that is the case, would a company that's publicly listed consider changing cash to a stable coin to facilitate payments more easily?
I think not at the moment. Personally, I do see the benefits of it. I mean, sometimes we do get frustrated when we do cross-border payments, in the more traditional banking system. But being in the driver's seat for a listed company, we do have to be more prudent. We probably won't consider that. We won't be the first to adopt it. And if you look at Bitcoin treasury system, Bitcoin treasury strategy, we definitely were the first, right? It was been successful cases before. To make it like more a sustainable thesis for us to present to the board. So I think same thing. We won't convert a portion or all of our cash into, stable coins.
Okay. Well, finally, you mentioned ask Claude for finance-related questions. But as a company, how are you integrating AI into your Bitcoin treasury business?
Well, I think, we announced our AI operating system for Bitcoin treasury management. And, the interesting thing is the inspiration to do that actually came from our more traditional operating business, because I was already seeing my entire operational team using AI in all aspects of the operating business, right? From product development, supply chain optimization, you name it. And so I'm like, why are we using more AI when we think about Bitcoin treasury management? So, I think now we have this platform, but before this platform, I think I can't speak for the space, but I think most Bitcoin treasury management team was probably running on the same kind of toolkit, right? We have spreadsheets, we have like news alerts, and we have, these conversations about, when and how to buy Bitcoin. But then it's not as systematic, and I think it's not as intelligent, right? I think that works for when the position is smaller, but it doesn't really scale when the position grows. And I definitely don't see that as sustainable model for the category as a whole going over the next, 3 to 5 years. So when we think about this platform, we're building it, it really is based on 3 things that we wanted to do. I know we put out a very long, press release about it, but let's share that in plain English. Like, what does the system actually do for us? I think the first thing is it unifies what we know as the management team, right? Because at the core of what we call the DDC treasury graph, it basically tracks and places every single position that we built, decision we've made, market signals, stock reaction to one centralized data set. And so that's kind of like a foundation of how we make all the decisions going forward, right? The second thing is it helps us make decision, right? The anchor capability within the system is the BTC purchase signal intelligence. So what it does is it pulls together all sorts of information, and we're training it to learn to even observe and track things that I might not be aware of, right? Because the most dangerous thing is like what you don't know, what you don't know. And so it's supposed to help us monitor things like outside of our normal framework to say, hey, maybe you guys can watch out for this and make better decision going forward, rather than relying a lot of times on like management gut feel, right?
We talk about humans training. Go ahead.
Okay, the third piece is it also governs and also help us document. I'm so Asian. Everything is like a three-part
everything has to be. I'm like that
I can't
too.
help it. I'm trained that way. But the final thing is like it really helps us govern and document everything, right? Because we want every decision to have all the rationale, and when we present to the board, to our auditors, and eventually down the road to the shareholders, it's very succinct and it's in one place, and you can actually trace everything.
We talk about, and you just talked about this, training AI models to do whatever task that you're asking it to do. Maybe suggest ways to optimize your business or analyze the markets, Bitcoin markets in particular, and find blind spots. You don't know what you don't know. That's dangerous. Find blind spots. But what can human investors learn from AI models? In other words, how can AI models train us to become better managers, CEOs, consultants, strategists, and Bitcoin investors? Anything you've learned from AI working with your own operating system that maybe you didn't know before?
I think not just our own system, but just using other, systems out there. I always get surprised in terms of how broad the scope that they can comprehend and bring into the conversation, right? And it could range from like, hey, I'm looking at this potential M&A opportunity, right? Let's do some work together, and then it'll pull in a potential factor that I, as human, really didn't think about. So I really like the clarity and the scope that it can quickly pull together during a decision process. Where human, I think we can also get there. It's not like we don't remember it, but it just takes time for us to like, oh, let's include this factor, let's include this. So shorten that amount of time. But at the same time, I think it's important for us to not 100% rely on AI generated results too, right? Because sometimes it tends to skip through things, or sometimes it makes its own assumption that might not be true. And so I think I want to be very critical about one point. The platform being built it helps us make decision. It doesn't automate the decision, right? So the management judgment is very much the primary driver of every allocation. That's important. I mean, anyone that's used a co-work with an AI agent before knows that we have to fact check it. We have to also challenge it every time, and I think that's good. I think it's kind of this push-pull factor that makes it really work.
We have a few minutes left for our final segment. We've talked a lot about DDC and Bitcoin. I want to learn about you as a content creator. None of this would be possible if you hadn't blown up on social media to begin with. So let's take a look here at your Instagram. This is Day Cooker.
Oh my God.
167,000
followers.
This is so old.
You have way more.
Yeah. This set the foundation of basically what we're talking about now. Can we make that statement? So
Instagram.
I mean,
absolutely.
There are hundreds,
YouTube.
Yeah, there are hundreds and thousands of cooking channels out there. You started this. You told me you started this when you were still working in finance. What did you do differently to differentiate yourself from the hundreds of other cooking channels?
I love this, by the way. Thanks for pulling this up, David. Yeah. And
I'm a content creator, so this is interesting for me.
I know. This is cool. Yeah. Well, I would say 10 years ago, the content market was very different, right? We were probably one of the early movers. Um, and I remember I started early in Hong Kong. We became the first like largest cooking website, but it was a small market, right? 2015, one of my early investors say, go to a bigger market, right? I'm like, okay, then I go to mainland China because mainland China in 2015 had no lifestyle content. So like we're the earlier to do it. So I don't think the content creation itself was much differentiated. What I learned over the years is to move fast and to have conviction and just to go for it. Right. I think the going for it is so important. And I know you're interested in the entrepreneur side of things. And I always share this, and it's a super cheesy model that I like, right? Do your best, forget the rest. And I think a lot of founders, how many times have you heard like, hey, I have this interesting business idea and I made it work and now I'm running this business. And someone will be like, I thought about it. Oh, I thought about it before. Because I mean, there's not that many business ideas out there that are truly unique that nobody else have thought about it, right? But the key thing is you've thought about it, but then you acted on it.
Yeah.
And you acted on it in a timely manner.
I've thought about moving to Mars, but Elon Musk has a better chance of doing that than me.
There you go. There you go. But same thing, like with Bitcoin treasury strategy, when people start thinking about doing it, we became one of the earlier ones to kind of analyze and assess the business model, see whether it's applicable, and we have what it takes to do it. And once we thought through it, then we just go for it. And I think going for it is so important for founders because we have self-doubt. We as in people in general, like, right? And I think a lot of times these self-doubt causes us to not act on what we think is right. And then we always question ourselves. And we question ourselves to a point where it's like, never mind, there's too much risk. I'm not going to do it. And so what I learned is during the past 14 years, I've made these critical decisions during like really important time, like going into mainland China market, listing into the US, right? And then now expanding into the Bitcoin treasury strategy has really allowed me to, venture into broader areas.
You had a career in finance at the time. So how do you think your banking background contributed to the growth of your startup? In other words, a lot of startup founders are very creative, very good at what they do, but they don't understand the business side. What can startup founders who don't have a business background learn from somebody with a banking background like yourself?
I think it helped me in a lot of ways in terms of early on fundraising. Even though fundraising itself, I also had to learn during the process, but I had some, foundation in terms of what needs to be done, build a business model, build that case, and also speaking to investors, right? My job as an analyst before was really absorbing a lot of information and then presenting in a very simple, easy to understand way to convince investor to build certain position. And it was the same thing, early on going after angel investors. I literally had to ask my early investor, what is Series A? Like, what is Series A? How do I launch a Series A funding? But I think having that finance banking background really helped a founder understand that aspect of it. But, at the end of the day, I think, David, having financial knowledge is important. But I think also having understanding of legal structure and legal concepts is also important. So I would say what's more important is know your own shortcoming, right? Always look for what are my own weaknesses as a founder. What do I don't know? And how do I bridge that gap, right? Either I go and learn quickly and as quickly as possible, or I build a team around me that can kind of, fill those missing pieces. I mean, the world is changing so fast. We try to keep up, and we can keep up faster with the use of help of AI, but we can't be everything. And so I think just having that mindset of always being humble, knowing my own weaknesses, and always doing self-reflection help us fill those gaps. Yeah.
My final question, and this is something I ask myself a lot, and I'm seeing you do it over the course of your career. If I look at the way your company has grown from social media to what it is now, it's marked by a series of pivots and expansions, not just minimal steps, but like big steps. If you look at the social media side from where you started, you didn't have to expand into food products. You could have stayed with social media and online content. You could have built a business that way. After you've built a line of distribution networks for food, you didn't have to go into the Bitcoin treasury side. That was completely unrelated to food distribution. You could have just kept doing what you're doing. At certain points, you probably had asked yourself and analyzed your business and decided that it was time to make a pivot or time to expand in a way that isn't just gradual. What is a decision-making process for each level of expansion?
That is a very loaded last question, David.
Yeah. You don't have to give us,
share,
like every single step. Maybe just broadly speaking, how you think as an entrepreneur.
I will share my very first decision. The biggest step was my transition from being head of equity research into, say, quitting and jumping into the startup field, right? And I think what I did back then was just asking myself, 2 years later, after I made this decision, what are the two possible outcomes? And how would I feel about that, right? I was like, okay, 2 years from now, if I don't do DDC, I'm going to be an HSBC, probably head of investment, right? I can see my career already. I was the youngest desk head. I know where I'm going. Picture A. Picture B is I now run a startup. If it's successful, I keep growing it. If it fails, I can come back to doing equity research, right? But if I don't do it, and 2 years later, there's a night cook that appeared, right, and became super successful. I don't want to be that person that says, I thought about it, but I didn't act on it. I also had that idea. And I think having that projection, right, just kind of taking yourself out from this moment, because you always, when you stay stuck in the current moment, you lose sight of the bigger things. And so for me, like, I don't want to live my life with regret. And so the bigger things, when I pull myself out and look 2 years down, is like, if I didn't make that move, I would have regretted it. And so same thing with now Bitcoin treasury or the pivots before. It's like, do I believe this is the right move to generate the most amount of value for a shareholder? Am I prepared for that road? And that road is not 3 months. It's not 2 quarters. It's going to be 10 years, right? If I think I can do it, then let's go for it. And I think that's really important, to have that longer term perspective into every big decision that you make. Can you hold yourself accountable and see it through? And just do your best and forget the rest.
Okay, so just final follow-up question. More specifically, let's say you take the social media side to, expanding into actually selling food products, okay? Just one question on this. How do you ask yourself, is this move worth it from a business and or financial standpoint, or both?
First of all, I think like when we started selling food business or selling food products in the content, we definitely must have seen some kind of opportunity, right? Back then in 2017, like Alibaba asked us to be one of the earlier tests for live streaming. Think about it, 2017, they were already trying to live stream. And so we're like, okay, that's cool. And so we tried selling some products. There was not a lot of traction, so we kind of just let it be. 2019, we start doing some, on the newer platforms, and products were starting to fly off the shelf. Once again, we see the opportunity, right? We say, okay, you know what? Let's go all in into selling more products or staying put and just kind of playing around with like one live stream sessions a week or a month. So we have to see the opportunity first and then say, do we want to go all in here or stay put? For me, I believe in, if you don't move forward, you don't stay put. You actually fall behind because the rest of the market will keep moving. So I always feel like staying put is a risk. Of course, some people will be like, well, you can be content. You can still grow a small business. Sure, you can. But I think as a business builder, like you and I are probably the same, we want to build something, right? We want to continue to kind of grow that influence, and staying put is kind of hard to do that.
Okay, yeah. Definitely appreciate that insight. Thank you very much, Norma. Tell us where we can follow your work. I know you've got social media, websites, DDC.
Just go to my Twitter, go to my X. Yeah.
Go to your X.
DDC
okay.
Norma. Follow me there. Yes.
We'll put DDC Norma link down below. Make sure to follow Norma there. Thank you very much, Norma. It was great to meet you, and I hope to speak with you again soon. Take care for now.
Thank you, David.
Thank you for watching. Don't forget to like, subscribe.